Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from November 24th to November 28th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from November 24th to November 28th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with German IFO business climate data and US Dallas Fed manufacturing index. Tuesday brings US PPI figures including both monthly and yearly data, along with the US Richmond Fed manufacturing index. Wednesday features a major day with Australian inflation data, the Reserve Bank of New Zealand interest rate decision where rates are expected to be cut to 2.25% from 2.5%, UK autumn budget, US durable goods orders, US Chicago PMI, and New Zealand retail sales figures. Thursday includes German GfK consumer confidence, Japanese unemployment rate, and Japanese retail sales along with industrial production data. Friday concludes with German retail sales, Swiss retail sales and GDP data, German unemployment rate, German inflation figures, and Canadian GDP data including both quarterly and monthly readings. This week's key market-moving events will be the Reserve Bank of New Zealand interest rate decision on Wednesday and Canadian GDP figures on Friday. Additionally, Australian inflation data on Wednesday and German inflation figures on Friday will also create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the New Zealand dollar against the US dollar and the Australian dollar against the US dollar, as both instruments face important economic data and central bank decisions. Let's start with the New Zealand dollar against the US dollar. Looking at the daily chart, the New Zealand dollar is currently trading around 0.5613, showing bearish pressure in recent sessions. The price is moving below the 20-day moving average, confirming the downward trend. The stochastic oscillator is inside the oversold area, suggesting potential for a bounce, but the overall momentum remains bearish. Looking at important levels, the New Zealand dollar against the US dollar has support at 0.5555 and 0.5469, while resistance can be found at 0.5682 and 0.5762. With the Reserve Bank of New Zealand interest rate decision ahead on Wednesday, this will be the most significant event for this pair this week. The RBNZ is expected to cut rates by 25 basis points to 2.25%, which could put additional downward pressure on the Kiwi dollar. The 0.5555 support level will be crucial to watch during Wednesday's RBNZ decision. If this level breaks following a confirmed rate cut, it could accelerate the downside movement towards 0.5469. However, with the stochastic in the oversold area, traders should watch for potential short-term bounces around key support levels. Now, let's turn to the Australian dollar against the US dollar. On the daily chart, the Australian dollar is currently trading around 0.6454, showing similar bearish characteristics to its New Zealand counterpart. The price is moving below the 20-day moving average, indicating continued downward pressure. The stochastic oscillator is inside the oversold area, suggesting the pair may be approaching a potential reversal point or at least a temporary bounce. Looking at key levels, the Australian dollar against the US dollar has support at 0.6369 and 0.6303, while resistance stands at 0.6535 and 0.6611. Wednesday's Australian inflation data will be important for this pair. The inflation figures are expected to show a year-over-year rate of 3.3%, down from the previous 3.5%. The current positioning below the 20-day moving average with the stochastic in oversold territory presents a mixed picture. While the trend is clearly bearish, the oversold condition suggests traders should be prepared for potential short-term bounces, especially if the Australian inflation data comes in lower than expected. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's RBNZ decision and Australian inflation data, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.